US indices taken a sharp hit towards the second half of last week. I have recommended caution in my weekly review last week. I have told very specifically that indices may take a break here and you need to trade with caution at such extreme levels. What has happened? No looking back trade was seen in the specifically last trading session. So can we say that this bearishness is going to spill over in the next week as well? Can we expect more correction here? Or this is just a retracement and the bulls are going to be here very soon? What is going to be our strategy in order to profit trading the S&P, Nasdaq and Dow in the coming week? We're going to see with the help of charts and indicators. We'll try to find out the levels which will confirm a particular trend, the levels at which you can enter a trade, the levels at which you can take a profit. This is a week I do share my daily analysis with precise levels, first with the Asia session, next with the Europe session, US session, so that you can continue to profit throughout the day and expect the trend and the levels at which you can trade with confidence. The subscribe, press the bell icon to get the notifications, join the free Telegram channel for live updates, and join the channel memberships here on YouTube to support the effort. Let's start in this update. First, we look into S&P, followed with Nasdaq in the end, Dow Jones, and at the end of every update, I'll be giving you the trading levels for the coming week. So watch till the end. Let's now see S&P after staying bullish for multiple weeks has shown now a little sign of retracement. Now notice very important thing here is it is not achieved higher highs this time, and it is reversing from a you can say a double top levels. Now, also notice it is trading with slight divergence from the 20 period, and in the recent past, we have seen 20 period moving average providing it a very good support. So, first thing is the S&P needs to trade below 6,059.80. If these two levels are taken, you can say 5940, 5900 is going to remain the next strongest support zone, and a move below 5900 just stay short for the next few weeks. We are ready to take a move all the way. See, notice this. Also notice that look at these three highs: 5800, 5780, the next support. And yes, looking at the move, what we had seen towards the last trading session suggests that there is no looking back. The prices have closed almost at the bottom, and this suggests that this momentum might continue here for a while. See, when it was trading bullish, it has continued the bull run for months and weeks, and nobody questioned. And now see, bigger rise, retracement, bigger rise, retracement, bigger rise, retracement, and now this is another round of rise. It is trying to turn from the middle. This could be the peak of the markets, which is what we had seen, and it is possible that we may see a reversal. Stochastic at the top, see the MACD after forming triple bottom, triple top, it is crossed over. And last week also I have warned you that look at the move here. There is lot much of downside available in S&P. In my annual review also I have mentioned RSI has dropped here as well. Coming today now on the daily charts, you can notice what has happened here. Hitting at the peak, we have seen a greater dip here. What has happened here after the rise retracement, it has moved towards the top, and now see we have seen a greater decline. And see, this is the decline in last 2 months after this greater dip in the month of December. Now what's happening here, notice it is almost forming a double top trying to reverse. I will wait for it to trade now below 59,86,000 levels, the first milestone, 5940 the second, and then the most important one at 5800. Now only and only if it breaks below this zone, you can say now the bears are taking over. Else what's happening, increasing bullishness is seen, and this is also an expanding triangle. If you broaden it a bit, you can find out right from 5700 levels. Two attempts have been made here, but this is a far beyond picture. Right now, it does not appear that it is going to deliver a move towards 5700 in the coming week. But yes, this is not a distant dream that these levels are going to be there. The stochastic has dropped. Look at the MACD. After hitting the highs, it is again crossed over. This is just the first candle. We have lot much of possibilities on the downside here. It is trading below the 50 period and 20 period moving average. Possibly it is going to breach below the 100 period as well, which means a move towards 5900 here. The RSI has taken a sharp dip as well on the daily charts. Coming to the on the 4-hour charts, now the moving averages have started to look downwards. We have seen increasing bearishness, increasingly down move here. And now notice the last two candles, it appears it is trying to find out the support at around 6,000. So now very important for S&P to trade below 6,5980. First attempt, second attempt, third attempt. This could be the fourth attempt. And this time if it trades below 6,5980, we are ready for a greater down move here. Stochastic oversold, MACD trading extremely bearish, RSI coming to oversold zone. Coming to the monthly charts, what has happened? Notice higher highs are done here. These are beautifully aligned. Now, if you look at the preceding candle, what has happened? Lower lows were seen. Lower lows means you can see a move all the way towards 5800 towards 5740 levels. Yes, connect the formation here. Look at the preceding move, higher highs, lower lows. Current move, higher highs are done. Can we wait for the lower lows, which means a move towards 5800, 5740, or in fact 5700? This is the question which we would like to seek an answer in the coming week. It is possible that a crash might be there soon. Now look at the formation. Notice on the monthly charts, the prices are trading with too much of divergence from the 20 period moving average. Right now sitting at around 5200, 5300 zone. And this is indeed a very good support zone as well. And this is also far below levels as well. But when you see what is a far below levels, see from 6000 levels to 5400 is just a 10% correction. And from 6150, 6140 levels, you can say that this is still not a distant dream. 10% correction is very much possible. If you look at the stochastic, this is extremely overbought. And when you see the recent history or the history of S&P on the monthly charts, you will find it hits overbought zone, it comes down towards the bottom, and this time it is possibly, see, this is a double top here, and this is possibly looking forward to the bottom. What has happened here during 2022, you can see this was a strongly bearish year, and this time it can replicate. Do watch my annual review. This will give you a fair bit of idea on what to expect. The MACD here is also in extremes, and the RSI is overbought. So now we have seen the charts and indicators. Time for me to give you the levels here, and before I provide you the levels, if you want to learn this art of trading, join my mentorship batch. If you just want to trade as per the signals, be a part of my signals channel on Telegram. Connect with me, write an email, ping me over Telegram for your queries. And if you're looking forward to a broker which offers you a SWIFT-free account with lowest spreads and no hidden charges, easier transactions and easier withdrawals from across the globe, you can find the recommended broker link also in the channel and video description. So first, let's talk about the levels to buy. I will only recommend you to buy if you see S&P trading beyond 6024 levels. Expect 604 to 6064, 6080, 6100, 6110. Now, I do not expect S&P to break beyond 6100 again. I think it is going to remain a critical milestone for S&P now for the near future, and thus on the upside now. Very clearly the fragility is seen in the prices, and even if it tries to recover, it is going to be difficult for S&P to break beyond 6100 now. On the downside, what I'll recommend a selling entry here is at 6, or I will say rather 5995 levels. Expect it to move towards 598480, and if that is taken, you can just stay short from here. 5971, 5960, and then 5940 levels should appear. And once it trades below 59040, the probability will be high that 5900, 5860, and then we are looking forward to 5820, 5800 levels here. Below 5800, no looking back, and in fact 5775. Below this, no looking back. We can look forward to a greater correction all the way towards 5700 levels in the near future. Be mindful of this. Remember, a 5% correction from the current levels should take S&P at 5700, and 5% correction in a single day is not a big deal. Take your positions, take your trades accordingly. Let's move to Nasdaq. Now, Nasdaq 100 is not traded differently from what we had seen S&P, and yes, it is showing signs of exhaustion here. Though the drop was seen after Tech 100 has hit the record levels post 20 to 200. I have mentioned very beautifully, very clearly in my daily updates 20 to 200, 240s you should watch out for. See, now it appears that it is aiming for 21,000 levels very, very soon. But that does that mean that this is the reversal here? Are the prices ready for a crash? Now, 21,000 and 20,005 levels will decide the next move, which is going to take it all the way below 20,000. But right now, too early to conclude, though the movement what we had seen in the last trading session and specifically last week suggests that there is lot much of downside available. Notice it's been more than 2 years of this rise, not more than, it's almost 2 years of this rise on the weekly charts. And you can notice this was the base, the one side is done, second side is all open, which suggests year 2025 is not going to be a greater year for indices. Let's have a further look at stochastic at top here. MACD, now see triple top, a crossover here, and now a divergence. Notice where this drop is coming from. Notice where the lows here, and see what could happen in the near future. Be mindful of this. The signs are not very much encouraging. Do watch my annual review and you'll get a clear picture. RSI has dropped on the daily charts. Now, after a while, now prices have come towards 50 period. Notice the last few times it has dropped, it has also moved towards the 100 period. Means we can now wait for it to move all the way towards 21, 21, 200, and then all the way towards 20,500 levels very, very soon. Possibility exists. Notice symmetry here, you can see this double top almost, and now this is going to happen possibly where we can see a move all the way towards 20,500, 20,000 zone. Very good support exists there. Stochastic is dropping, MACD again trying to cross over for sell, then the RSI is right now trading bearish. On the 4 important to note, the moving averages, which is traded bullish for the entire month, are now looking forward to a convergence here, though not yet crossing over. Increasing bearishness is seen, and the prices have closed at the bottom here. Very important for Nasdaq 100 to trade now below 21,500. Below this, possibility will be very, very high that it may try to find the next support at 21,350, 400, 21,200, then 21,000, and below that we can see the next move all the way towards 28, 4,800. Stochastic has dropped to an oversold zone, MACD trading bearish, RSI at bottom. Coming to now on the monthly charts, I've mentioned one thing. See, this could have become a reversal confirmation, but what has happened for the last next two candles here? It is consistently delivered higher highs and higher lows. Now, very important to note where it closes this month. A break below 21,000, a break below 20,000. See, these are markets, anything and everything is possible. 20,000 levels from the current levels, that is at 21,500, is almost, you can say, 5 to 7% correction. And these are markets, anything and everything is possible. If it is 2 to 3% a day, we are done with this target in just 3 days. Though this is an extremely, you can say, negative picture which I am portraying, but you can see yourself, see what we had seen in Nasdaq 100 for the last multiple weeks. This was the bottom what we had seen in the beginning of 2023. 11,000 levels. What it has done, 22,000 levels. Now 11,000 to 22,000 in 24 months, doubled up. Now this doubling up, 100x return in just 2 years. I can say, rather I'll say it is 200% return in just 2 years. You can say it is very, very difficult for it to sustain these levels here. We have to wait and watch, because see what has happened after this run. We have seen months of bearishness. Now this is the second wave which is done, and it is ready to embrace the next down move here. That is what is my expectation, but it is going to depend where it closes the current month. This will become reversal. It is too early to conclude. Again, I am saying it is too conclude early to conclude, but since we are looking at monthly charts, we are discussing about the long term prospects, and you can watch my annual review which I have released uh, before the beginning of this year, and thus that will give you a fair bit of idea on what to expect. So now we have seen the charts. See, the stock IC here is overbought, the MACD at extremes. Look at the V-shaped recovery, it is at the top and it calls for a reversal, and the RSI is extremely overbought as well. So now looking at this, let me give you the level. You can watch my daily updates as well to get the clear picture on everyday move in Tech 100. The subscribe, press the bell icon, do like, share, and comment. Now, first, let's talk about the levels to buy. I will recommend you to buy here at 21,620. Expect it to move towards 21,660, 21,700. 18 levels, and then we can see 21,800. Beyond this 21,800, you can just stay bullish. We can see the next move towards 21,920. See, these all levels, those who follow me for long now know by now, and 22,050. Now if this is taken, then 22,200 has to be there, but I do not see these levels are going to be there again any point of time soon. On the downside, a selling entry now I'll recommend is at 21,540. Expect 21,500, 21,400, 21,360. Now 21,360 is a very good support here on the downside. Below this, you can expect the next move towards 21,200, and if that is taken, then 21,000 has to be there. Yes, it can drop all the way below 21,000, where 2840 should appear, 2680 should appear, and then 2500 has to be there, and in fact 2400. These are the key levels here on the downside. Below this, 20,000 should be there very, very soon. Showing you a bit negative picture, but yes, I have been not in support of such a stronger rise what we had seen in the indices in the recent past. Thus, the reversal is going to be equally sharp as well. Take your trades accordingly. Let's move to Dow. Dow Jones on the weekly charts, after consolidating here at the top for multiple weeks, after showing a struggle at 45k, the last week it has shown first bearish candle. Now notice it is a symmetry here. Divide this into two. This is a reversal sign. First, second symmetry. First green, then first red. The next one, what we had seen was a strongly bearish candle, a bullish candle. So what could follow? We can see a strongly bearish candle here, where in the near future, see, we have discussed this, that we will look forward to 42,000, 41,800, which is highly probable as it is forming a double top here. It can form a double bottom here. So we have to wait now. We have to wait now for the US 30 to trade below 43,200, 43,000 levels in the, and only if it trades below 43,000, 43,200, we can expect the next move in US 30 is going to take it directly towards 42k and 41,800, which is going to remain the very, very good support zone, because below that a greater correction should follow in US 30. Notice it is largely on the weekly charts trading in this bullish channel, where the support levels are still far below towards 38k. Stochastics right now looking downwards. See, MACD after hitting the highs have now crossed over, trading with divergence, staying bearish. What has happened here? Months and weeks of bearishness. This could follow. See, this was almost a 2-year run. 21 to 23. 23 to 25 done. 25 to 27 is what we are looking at. This could lead to a massive correction cycle. RSI has dropped. Coming to on the daily charts, I have observe this, I have mentioned this. See, first, then double bottom here, then double top, and now it is again looking forward to these levels, 42,000, 41,800, below which you can expect 40,000 as the next milestone which it would like to achieve in the near future. Only worry point is lower highs, lower lows, and now it is very important for it to trade now below 43,200, 43,000 levels, trading below which we are looking forward to a greater correction. The stochastic has dropped here, the MACD trading sharply bearish looking downwards. The RSI has dropped as well, and the similar observation is here on the 4-hour charts. Now the moving averages have crossed over, which is an increasingly bearish sign. Drop retracement, bigger drop, it could retrace towards where the more time it spends here, the lower is going to be the retracement. 43, 700, 800 should be an extremely stronger resistance on the upside now. indicators are slightly oversold, which calls for a little pullback. Coming to the now, see on the monthly charts, I have shared this red, green, now green, red, green, and the current candle should be red. Now, current candle should be red. Already we have seen lower highs, so lower lows. A possibility of a closer of the month at around 42k, 41,800 is high. It is right now almost 1500 points, and 1500 points for US 30 is also achievable in a single day. It is not so that it is going to do that, but yes, the probability is high. Notice also this is how US 30 is trading. This is a bullish channel. Very, very important for it to close the month around 42k, 41,800, and then the coming month is going to deliver another round of drop towards 40,000, 38,000 levels. Though it appears not so easy, but it is not so difficult or neither improbable as well. And hence, you have to watch out the support levels. Stochastic dropping here, the MACD is in green, trying to converge crossover. It has seen the extremes which it has not seen historically. Whenever we have seen such rise, it follows with a drop, and it appears it's a 2-year cycle which is beginning here from 2025, which is going to take it all the way down. Possibly, RSI has dropped. Now we have seen the charts and indicators. First, let's talk about the levels to buy. I will only recommend you to buy if you see it is staying above 43,520 levels, where I will expect it to move towards 43,650. And once it trades beyond 43,650, 43,720 and 43,800 levels to be there here. Now, this is the zone which is definitely appears achievable, but this is also going to remain the prime resistance zone on the upside, because once it trades beyond this, we can expect the trade to move towards 44,000 levels, and 44,000 should also lead towards 44,240 and 44,400 levels as the next targets. Beyond this, you can expect more bullishness to prevail. We can expect all the way towards 44,700, 45k levels as the next targets. On the downside, what I'll recommend a selling entry here at 43,320 levels, and expect it to move all the way towards 43,200. And once it trades below 43,200, chances will be very, very high that 43k, 42,700, 42,400 and 42k should be there very, very soon. Below this, 41,800 is going to be the next support. So this is going to be the prime support if at all US30 starts to move downwards from here. So this is all for the weekly levels here. Do not miss to watch the twice a day levels and strategy which I share every day for you to profit. The subscribe, press the bell icon, do like, share and comment, join the free Telegram channel for live updates and the channel memberships here on YouTube to support the effort. Thank you very much. Have a great profitable trading week ahead. Thank you.